Right.
Hey,
Vishal, maybe start with you. Quick intro.
sure, I'll do a quick one. And, just for the record, since we are getting on the record, Edith has to do absolutely zero begging to get any of us to hang out with her. It's always an absolute pleasure. And she's one of the first people I look for every time I'm in San Francisco as well. I miss those dinners we have every time I'm in the city. I think Peng was there at one of them as well, actually. Multiple of these things, now that I think about it. My name is Vishal. I'm a managing partner at 500 startups across Southeast Asia. I focus on investing at the early stage, and by early stage, I mean pre-Series A, across the markets primarily of Indonesia, Singapore, Malaysia, and sometimes the broader region. I run it with my partner, Kylie, and the two of us have over the last 7 years invested in something like 250 companies across the entire region. When we started in just a little quick story on that one. When we started investing in about 2013, 2014, there wasn't much of a Southeast Asian venture ecosystem back then, as Peng can tell you as well. And so to draw attention to it, and also because we felt like investing in Southeast Asia was a bit of an acquired taste, we called our funds at that time the Durians Fund, the 500 Durians Fund, which was really a fruit for connoisseurs. And we felt like investing in the region was just like that. It's been 7 years now, and the scene is so different. So now we call ourselves 500 Southeast Asia. So we were early investors in companies like Grab, Bukalapak, which just listed in Indonesia about a week ago. It's the largest IPO in the market, Finexcel, Carousel, Prenetics, and a whole bunch more. It started 7 years ago with every company starting just like you, like very early stage pre-Series A. And now, there are 5 large IPOs happening this year alone, a whole bunch more next year as well. And so stay the course and hold the distance because good things happen in the longer run.
Awesome. Peng?
Yeah, my history is a bit longer because I'm a bit older. I grew up in Singapore, went to the US for school and stayed there for 18 years, building companies, and then moved to China to really try to understand what China is about. For about 4 or 5 years as a VC there with GSR Ventures, and then we were involved in deals like Elama and DT early, and then moved to Jakarta and 7 years there, based there, but flying around Southeast Asia, and I guess it's hard to say I'm based in Jakarta the last year and a half because I'm stuck in Singapore. Monks Hill is a early stage Series A mainly investor.
Awesome. Cool. Thank you for the quick intro. So I want to actually dive right into the current state in terms of funding environment, particularly in Southeast Asia. In terms of valuation, funding size, like most of these deals, seems like from afar, being in the US, the deals in Southeast Asia is heating up with, Gojek, and which combined with C now one public with like 160 billion valuation. Grab went public via SPAC. It seems like a lot of things are heating up. So what would be some of the sort of like quick trend that is going on in terms of funding environment in Southeast Asia? Peng, do you want to start first?
Yeah, there are lots of companies. So we focus. We don't. In fact, we don't really pay that much attention to the IPO market, right? Because these are companies that were invested, 10 years ago. We focus on Series A. So after Vishal, and that's really heated up the last 12 months, I'd say. For whatever reason, COVID has caused entrepreneurs to get really serious about building companies, and good ones, not just, so we haven't, the deal rate we're working on right now is almost one a month, which is about twice our regular deal rate. Right? In 2019, we did like 3 deals. Right? This year we'll do probably 12 deals. So there are lots of good companies, but also what we're noticing is there's a whole bunch of non-local investors that are throwing money at deals locally. So through YC, through incubators elsewhere. It's good and it's bad, right? If you, as an entrepreneur, if you can get the great money, like 50 million pre for a C-stage company, we just saw a couple of those, and then there's one that did 100 million right after YC. Right, we're going. What is going on, right? And I think mainly it's because people are really getting excited about Southeast Asia. Maybe China helped, but they are not. They don't understand the risks yet, right? So, so people are, I think, just throwing money at a lot of deals. So, if you're in Southeast Asia, I think you're in reasonable shape if you can pitch your company properly.
What are the typical valuation and size of like Series A when you lead these days?
Yeah. It used to be pre-money 5, 8, 10, it's almost like a seed deal in the US, to post-money 15, 16, 18, right? Now it starts to look like 12 pre and 10, 12, 15 pre to 20 something post, right? Raising about 5 to 7. It's gone up.
Got it. And then like for your fund, do you have a minimum equity ownership?
Yeah, it used to be 2025. I think we're more flexible now. We tend, look, this thing you work with the customer. Actually, that's how we think of entrepreneurs, our customers. And you figure out a spot where both of you, feel comfortable at. We're going to spend 5, 8 years with you, maybe more, right? So we want to make sure we have enough stake in the company to make that count. At the same time, we don't want to take away too much ownership from the founders. It's something we figure out on the way.
And then with what you're looking at, is that particular vertical that is more interesting? Is it vertical that you don't invest?
We try to stay away from the sin businesses, right? Alcohol, gambling, things like that, right? Things that could get us into trouble reputationally. Right? So those are about it. Everything else is pretty open. We tend to focus on the more economically efficient companies, meaning higher gross margins businesses. Although higher gross margins, you could look at it from absolute terms too. So meaning it might be low percentage gross margins, but it's a huge market, right? And it's easy to get out huge market. So those businesses we look at also.
Got it. Cool. Let's switch the conversation to Vishal. Very similar questions. Vishal, on seed stage, are you guys doing an accelerator in Southeast Asia? What do you see these days for early and seed or pre-seed or whatever you call it these days?
The rate people are calling their rounds anything now, so we just say that we invest largely before the Series A just to make it easier for founders, and we'll look at anything from ideas onwards, but we mainly invest in companies that already have a product. So trends in funding, I think, which was your first question, what are we seeing in the market? I think like Peng said, there's just a lot more capital in Southeast Asia than there used to be. And what are the new sources that they're coming in from? One of those new sources is, for want of a better phrase, like the Indian outpost of Silicon Valley-based VCs, or the Indian investment arms of folks like, Sequoia had historically always been investing in the market, but now we are seeing Accel, Lightspeed, DST, the various offices of the Indian outshoots of the Silicon Valley firms investing quite aggressively in Southeast Asia. The behavior right now seems to be a little bit clubby. In general, they're all going into the same deals for the most part, but they're starting to also cast their own individual checks. As you know, either GGV has also set up an office over here and has started to invest at least in a couple of deals in the market. At the same time, especially in the later stage rounds, right, we are seeing much larger participation directly from independents like family offices, which are coming in with their own ticket sizes in Series A and Series B, rather than just through investment funds, which is something that used to happen in the past. And there's also just like a lot of like expatriate capital from the US coming in without actually having a necessary presence in Southeast Asia. So, it's something which was said earlier. Tiger Global is invested in the last few months in two of our companies that are at Series A. Doing that regular deal, which is a phone call and a 10 or $20 million check right off the bat into these companies, one in Malaysia and one in Singapore. So definitely a change of behavior, definitely more capital. We're seeing that happen at the Series A stages onwards. And what it means for our founders and earlier stage founders in general is that there are a lot more options as well available on the table for funding. Second, what are the valuation ranges that we're looking at seed? I think the valuations have definitely climbed from when we first started, but I think they're still what I describe as rational. And across all Southeast Asian markets right now, I don't think there's necessarily an exuberance in any one market over the other. Maybe Vietnam is starting to climb a little bit faster than the rest right now. Seed deals that we're looking at, again, because we invest in such a range in the pre-Series A, it starts anywhere at 2 million post to 10 million post, right? We are starting to see some deals that are happening at the higher end of the seed spectrum, like folks starting at 10, maybe even 12 million post money, raising a couple of $1 million that are coming out of, these are basically serial entrepreneurs or people who have had smaller exits in the past and now are starting their second or third companies, or folks that are from the senior management of the unicorns in Southeast Asia that are spinning out and starting their own companies. So while at the Series A stages onwards, you have new capital coming in, for example, from the sources that I mentioned earlier, for seed, what we're seeing is that the angel rounds are getting larger. So it's not uncommon now for us to see an angel round that is $1 million or $2 million into companies syndicated across people, which is quite an interesting development. So we try and invest alongside those angels. What was your last question, Edith? I forgot.
Is there any particular vertical that you pay a lot more attention to versus vertical that you don't invest?
No, we definitely don't invest in the sin categories of companies. So, like alcohol, sex, drugs are not things that we do, but everything else we look at. We are fairly broad, and I'd say generally sector agnostic investors, but each of our funds follows themes. So largely about 70% of those funds would invest along certain themes. I like to use an analogy of wine because I think it's quite apt for this thing, which is like every vintage of the fund from which you're investing in, the terroir is different, the weather is different, so the quality of whatever you get out of it in terms of yield and the type of wine that you produce in many different ways, or the characteristics of it is going to be different, right? So the same thing applies for venture, which is what we're investing now in 2021 is fairly different from what we were investing in 2017 with our previous fund, and fairly different from what we were investing in 2014 with our first fund over here. So what are the themes that we care about right now? Again, broadly speaking and broadly defined, we're looking at categories like what we call embedded finance or fintech for the masses. We're looking at healthcare with a focus on self-care. We're looking at rural digitization across multiple economies in Southeast Asia. At sustainable cities, it's one of the big themes that we have. The all-commerce ecosystem, which is not just e-commerce, but it's about selling across multiple platforms and the ecosystem that develops around it. We're looking at what we call human and machine productivity because we think that there's an increased push for that stuff. And if I've not mentioned it already, sustainable cities, which is everything to do with the regulatory push that's happening top down from governments and the consumer push with their wallets from bottom up about people caring a lot more about things that go in their bodies and how they're made and manufactured and the effects on the environment.
Got it. I have a quick question about, I'm sure like many of our founders will ask you as well, on the market itself. So you guys both sitting in Singapore and invest across Southeast Asia as a whole region. And of course, Peng also have, go to Indonesia when you can travel again. But when you Southeast Asia, to me, is so interesting because everybody talks about it. It's very, very exciting. Very young population is definitely growing. It's huge. But at the same time, Southeast Asia have so many different languages, very, very different in terms of GDP, going after Singapore versus going after Indonesia or going after Vietnam is completely different. So when a company from Hong Kong pitch you, we would really love for you to invest because we go to Southeast Asia. What does that mean? And how do you see it for the market? What would be the qualifying questions? I have my own viewpoint too, but I'd love to hear yours first. Vishal, Peng?
Peng, why don't you start off?
So I think the Singapore is probably sort of the outlier. You got to be clear what your market is, right? It's very difficult to build a product that works in emerging markets where the GDP per capita is 4,000 versus a product for a GDP per capita of 10 times that, right? So we actually see two types of companies out of Singapore. One are the companies that are going after global developed economies, in the tens of thousands GDP per capita kinds of economy. And sometimes you also skim on that economy in the emerging markets, right? Every economy has a small chunk that the developing economy has a small chunk that behaves like the rest of the developed world. So you got companies like that coming out of Singapore, and they focus more on Singapore, Hong Kong, sometimes North Asia, sometimes US, more like the Israeli companies, if you can think of it, right? The Israeli companies are really good examples of the type of companies we could build out of Singapore and Hong Kong. So that's one group. But the other group are just people that are headquartered in Singapore, but they're targeting the emerging market around us, like Ninja Van, like Grab, where they look at Southeast Asia and 650 million users and going, if you take away Singapore, it's like 5 million users, so 645 million users. And how do you monetize out of that? It's like China 15 years ago, right? And so you build pretty international companies that way in emerging markets, going after all those countries, but not all at once, right? I think if you take an example of Ninja Van, which we were seeing Series A investors in, they're trying out in Singapore, but then they went to Malaysia, and then Indonesia, and then it's Philippines, Vietnam, and then Thailand. So in those first 3-4 years, right? That's what they did. So you try it out going international early. Second year you should be international, and then you get a playbook by the third year. So this are the people I need to put in place. These are the things we need to do. Some verticals are more complex than others, like financial services. You got to get licensing and all that. Logistics, you got to get licensing, but it's a lot more similar to each other. So that's what we do in Southeast Asia, and I'll tell you, there's an advantage to doing that. Because the rest of the world is larger than China, the rest of the world is larger than the US, right? So you're going after a much bigger market. Eventually, if you don't think of yourself as just Southeast Asia, your muscles for internationalization is there because you've done it all your life as a company. And just as an example, we talked about C Group earlier. C Group is 100-something billion in valuation. It's the largest tech company in Southeast Asia. Guess what their second largest country is? Forrest was telling me this, I think last year, so it might have changed by now. But it's Brazil. Right? Brazil is nowhere near Southeast Asia, right? But it's the second largest country. Going to Brazil is no different to them than going to Indonesia. Right?
Interesting. So, yeah. Can I ask you a follow-up question based on this? So most of your investment, let's say if they start from Singapore, is everybody just immediately go to Indonesia, or is there a particular logical way of movement coming from Singapore, where do they usually go for the first one or two?
We like entrepreneurs. A lot of times it's actually founded in the one of the other countries. They just incorporate in Singapore. Singapore is like the Delaware of Southeast Asia. But if it's founded by a team in Singapore, what we like to see are thoughtful entrepreneurs that go for our sector, for what we do as business. Thailand is the best place for us to start, or Malaysia is the best place for us to start, or Vietnam is the best. So there is no magic bullet. You go to Indonesia. The problem is the people who think less will go. Indonesia is big. Let's go to Indonesia. But Indonesia has lots of issues, right? And especially if you're not local, you bump into a lot of them, right? And also because Indonesia is 40% of Southeast Asian GDP, most people that look at this size of market will go after Indonesia. So it's also the most intensely competitive market around. So you shouldn't just naturally go to Indonesia because it's big, right? You got to think through where you're going. Vietnam is 100 million people, right? It's not a bad place to do business. Thailand is 60, 80 million people, so about 70 million people. So that's another big chunk. So there's no canned answer to that. It depends on your business.
Thank you, Peng. Vishal, so how, with 500, how many 500 companies do you have invested in so far? What are some of the top countries? And then also, like, how often do you see cross? Let's say someone from Singapore now jumping over to a different place, or Hong Kong, let's say with Danny, right? So Hong Kong, he's also very experienced. So how do you think about that?
So we must have invested, I think, in over 250 companies from the Southeast Asia, pan-Southeast Asian funds. So we've primarily, I'd say our markets have been Indonesia, Singapore, Malaysia, and then the rest of Southeast Asia, fairly opportunistically. Vietnam would probably be number 4, followed by Philippines. In Thailand, there's a separate fund that caters to that market that, Mu and Kriting run. So we don't really look at Thailand very much. But the rest of Southeast Asia, I think it's really in that order, pecking order. Indonesia, Singapore, Malaysia, Vietnam, Philippines is really how we think about investing across all of those markets. Now, in terms of crossovers, this is an interesting question. So I think very broadly speaking, on perhaps the broadest level, you can segregate the type of companies based on whether they can build like big, large businesses just focusing on their local markets versus a need to regionalize or internationalize. So if you're looking at an Indonesian company or an Indonesian founder, 9 out of 10, actually 9.9 out of 10, they're building a business that is just for Indonesia. Very high likelihood that they have no ambitions, at least, for the first number of years of their business, to even think about expanding overseas because the local market opportunity is large enough. Similar dynamic in Vietnam because the population is about 100 million over there. So it's large enough, right? So Indonesia is the 4th largest country of the world. There are 270 million people over there. Vietnam has about 100 million people. Large, meaty markets in which you can build fairly large local businesses. Now, as we start going to the smaller countries, let's say Malaysia and especially Singapore, entrepreneurs are more likely to build businesses that have a much more regional slant to them. So in Singapore, it's the type of business that we invest in, or the texture of the businesses is such that the founders from day one want to build something that is at least regional, if not global. The nature of the product is such because catering to a local population, a local consumer population makes very little sense. It's hard to build, and there are very few categories in which you can build large defensible businesses just doing that. So they tend to internationalize quite quickly. So SaaS companies, for example, you see a number of new ones coming out of Singapore, or companies that plan to, for example, build services marketplaces or product marketplaces in other countries, but are really just testing their product in Singapore just to start with before launching and internationalizing. That's, I think, broadly how we see it. In terms of what is the ratio of crossover in the portfolio, I'd say it's about 50%, if not higher, of companies that are more than one market.
Got it. I see. So with that, that's sort of my general question. I really want to leave as much time for the founders to ask questions as much as possible. But I have a quick comment about on this whole market thing, because there's more than one of you will ask me, oh, what do you think about Southeast Asia? And I really mean it. First off, even though I am, Bonnie, Philip, and I are like supporting you guys, but if you have to ask a VC that, then you probably shouldn't even go. Please don't ask an investor for, I mean, it's good if they are friends and friendly, but which means that you haven't done enough of your homework. And the likelihood of, and as Vishal said, is 50% that actually do crossover. Yes, you should think globally. Hong Kong is too small of a market, but at the same time, there is definitely methodology, which we're going to talk to, what's his name? So next week, by the way, as preview, we got the country manager for Indonesia for Xiaomi. He's been with Xiaomi for 7 years. He's going to talk about how Xiaomi go after the Indonesian and Indian market. And you need to really talk to the local. You really do need to do a lot of research. Most importantly, hire the right people locally to help you to go to market. So it's not just research will be enough. So you're building a business. You want to show the fact that you know what you're doing. So I'm going to stop here and also stop recording and now open up for everybody to ask questions.